But we're really delighted to be joined by Daniel Sawko from Shipshape VC. Hello, Daniel. Who's at the Tramshed in Wales, in Cardiff, which, if you're ever heading down to Cardiff, is the tech hub to be. Daniel, really wanted to get you in for a number of reasons. You're a classic example of someone that found a problem, decided to build a solution, and the business has been built around it, which is always a good indicator of a product market fit. Second one, I think you're solving a problem that pretty much every single person on this call has, which is sourcing investors, finding investors, and you've made a really elegant, simple solution around it, which I know we're going to get a demo of a bit later on. But just as a bit of background, I'd love to find out very quickly who you are, what brought you here today, and how you came to Shipshape VC.
Yeah, Paul, thanks very much for having me on, and yeah, it's a pleasure to be here, and yeah, hopefully we'll get a chance to share some of the mistakes that I've made along the way, and yeah, and ultimately those mistakes that led me to finding the problem that we're looking to solve at Shipshape, and you know, by all intents and purposes, we have solved it for some people. We want to solve it for more people. Yeah, so a bit of background. So I've got an economics background, and I find it really interesting when markets don't function properly. And I think that the venture capital funding market is a classic example of a market that doesn't function properly. You've got lots of middlemen who take exorbitant fees from people who can't afford to pay those fees and don't end up doing what they're supposed to do, basically, in those instances. And likewise, it's really difficult for investors actually to market themselves effectively, especially if they want to be specialists. So, for example, in reducing pollution in cities, some would consider that relatively niche. So how do you go about finding, if you're an investor and you want to focus on that as a central part of your thesis, how do you go about trying to solve that problem? Yeah, this is a classic market information asymmetry problem, which has fascinated me for many, many years. That's why I'm here today, basically. Went from economics, did management consulting, worked in a startup, made the mistake of saying, yes, I would be able to do the investor research for that startup, and then quickly found out that tax compliance software is a niche, and not every investor is interested in it. So, yeah.
How exciting would the world have been if you'd bossed it in tax compliance software? So, you know, when you were first starting off, yeah, what were you trying to raise? What were the mistakes you made, and what did you find were, you know, the things that sunk your time?
So I think the biggest problem that I felt I was facing was there's an abundance of data out there, so it's very easy to find investor lists. So just a bit of context, we were raising a 5 million Series A. It was just over 4 years ago. So 5 million Series A was a very respectable Series A at the time. The headline numbers for Series A have moved northwards since then. But yeah, 5 million Series A, where it was meant to propel the business to basically international markets, to grow the size of the team. There was some early traction. We weren't quite at that magical 1 million ARR, but we thought that we had a good chance because of a number of other factors of raising that 5 million Series A. But going about that problem, so first of all, having a founder that doesn't want, or in this instance, didn't want to necessarily take the lead on a lot of the fundraise, that was really quite an interesting starting point, and one that I found very quickly, not being the founder and not even being a member of the C-suite at the time. I found that quite challenging, and you know, if you are a founder, and you're raising anything less than like Series B, Series C, actually not having the founder as directly involved in fundraising is a real sort of millstone around your neck. It really drags you down. That I think was sort of problem number one. Problem number two: there's loads of data out there. Investor lists are everywhere. Everyone, you'll see lots of people on LinkedIn, for example, like comment here and you get this investor list of like 5,000 investors, etc., etc. And then, you know, it turns out that Homebase are somehow magically listed as one of the investors that you should get in touch with. These lists are just not that easy to sort of narrow down and filter down. Yeah, and you've also then got things like Crunchbase. That was actually the primary research tool. We did also try and blag access to successfully, PitchBook and Bowhurst for a time. And the fundamental problem that we kept running into was, it's great, we can find several hundred fintech or like VC funds that are interested in funding fintech, some that also go down into regtech. But tax compliance software, particularly within financial services, and then also enterprise sales, because this was a tax compliance software that had to be sold to one of only a few dozen customers globally, which is the great big tier 1, tier 2 global institutions like your HSBCs, your Morgan Stanleys of this world.
Yeah.
Like finding investors that knew fintech, new regulatory technology, new tax compliance across 2 very niche tax regulations, one called FATCA, one called CRS. I don't know if anyone in this room has ever heard of either of those. Yeah, yeah. So it was exactly that type of response with investors too. So trying to find which investors were actually the long tail, interested in what it was that we were doing, was really, like, I think that probably was the most challenging thing. And when we found people who understood what it was that we were doing, the conversations were very, very different. It was talking to a university student versus talking to a toddler and trying to explain something.
Okay. And so in terms of that process, if you were, if you had have been that founder, that C-suite, and you're starting afresh, what does a good process look like? I think everyone in the room here, they're all looking for investors that are fairly niche, fairly hard to find. If they're more sustainability, they've got 1,000 people after each investor. So from the very start, what would a good process to start sourcing or looking for investors look like? What are the steps a startup should go through?
So I think that there are a number of steps that any founder should take. Doesn't mean that you have to take all of them, but a mixture of, so there are some optional ones. So one I would say is definitely try and build a social media profile. Sorry, good Kristen. Sorry, Kristen.
You're on mute, Kristen.
I have a question whenever you're done. Keep going.
Cool. All right. No, it's still. Yeah. So one is I would say actually building a social media profile is one of the best things that you can do with regards to a fundraise process. Let others know what you're doing, what you're building. Like we hate, as a company, we hate tagging. Things like fintech or like regtech or clean tech. These are sort of that's the reason why we exist, is because these tags are horrible. However, from a social media perspective, actually having tags that people coalesce around is really helpful. So if you want to share that you're building something in clean tech, green tech, or clean air, actually building a social media profile, posting regularly, and using those hashtags really helps with generating an audience. Ultimately, you're selling equity, and by building that social media presence, you're building credibility in the same way that you would with the buyers of your technology. And I think that's actually probably the most critical thing, is the way you sell your equity and the way that you sell your service are usually aligned. Like the way that you sell one usually indicates how you're going to sell another.
And is that to be found? Is it to have credibility with investors? Is it to get on investors' radars? All of the above?
Yes, all of the above. Yeah. I'd say yes. I think actually it's one of the most important things that I wish that I had taken on board. I did have people telling me this is really important, you ought to do this. Yeah, and I didn't do it for about a year and a half, and it's been very good since then. But I think sorry.
So I think from our end, we'd also echo that as well. I think there's a lot of startups who absolutely, some love the profiling, others abhor it. But what we do find is that if you've got that credibility and that sort of not publicity, it's the wrong word, but if you've got a bit of a name for yourself in the investor world, I think it does help with credibility. It does help with investing. It does help you get into the room. It is important.
Yeah, I would totally echo that, and it's almost like having you've got a billboard, and it doesn't cost you anything. You basically, as long as you're specific enough, you've got a billboard in front of someone else that you really want to get in front of. What would you say to them? Because they probably follow that. There's hashtags as well. Kristen?
Yes, I'm quite bad at social media. I'm one of the one of the latter ones. I tend to post on LinkedIn, but I'm horrible at Instagram, Twitter, Facebook. Do you really need to do all the platforms? Okay.
No. Find out where the fish are, and then go that. So for us, we have I suppose a couple of markets that, or like we're essentially a 2/3-sided marketplace. Our audiences are very active on LinkedIn. Slightly, startup founders are very active on LinkedIn. Very important audience for us. Investors are some investors are slightly more active on Twitter, but lots of them are on LinkedIn as well. I don't use Instagram, TikTok, Facebook, but that's us. It's not the same for everyone.
I think LinkedIn definitely. I think that is a lot of default searching where you'll find people. I think people automatically will go and search you up if they're starting to do some due diligence. As you know from all of my sessions, Twitter I think is brilliant for finding and engaging with investors. You don't necessarily need to create a persona or a profile, but beyond that, it's very easy to engage with them personally without the whole sales wankery that you get from LinkedIn. To you both, Ryan.
So, Daniel, this is really good, and thank you for this. I guess LinkedIn's always a troublesome one because whilst that's where investors are, that's where everyone knows investors are, and so investors get kind of bombarded with. So what would be the best way of kind of differentiating yourself on LinkedIn or really getting noticed?
Yeah, I think everyone tries to go. I don't know how many people follow football, but everyone tries to go like Sam Allardyce route one on LinkedIn, and they go straight for the DM, and I think that is just it's just a disaster, right? However you dislike being sold to, whatever the service is, whether that's a recruiter, a developer, whatever it is, if you're a founder or like see something on LinkedIn, your inbox is your LinkedIn inbox is full of that and full of connection requests that are from people who just want to sell you something and are going route one. I would say, Ryan, that's the best way that we have found actually is either with a highly tailored outreach message. So actually one of our investors that we found using our own search engine, we found that they were interested in data science and venture capital. Sort of went on LinkedIn, started engaging on a bit of content, made a couple of comments on like some of the blog posts that we found that were relevant to us and what we were building and what they were interested in. And actually, by doing that and not sort of, we didn't go for the jugular, as it were, straight away. We were building a relationship that we had a multi-year time horizon view on, rather than thinking, oh crap, I've got to make payroll next month and we're short. That was the approach that we took. So even if you are short on payroll next month, going in with this is a 5-year time horizon relationship that I'm building, that is probably more likely to lead to success in the short run and the long run too.
Very good, really good.
So many, Kristen.
Sorry, I have so many questions. No, one more is, I guess, what do VCs look for as an exit? Because I have what I would want as an exit, and then there's what the investors want, and I don't know if what I want is okay. So what I would want is, let's say, 10 years, doing lots of R&D, different products, collecting royalties, and then exiting with from selling to a company, a partner then. But I feel like VCs want the quick cash as soon as possible.
I think that is, yeah. I answered that question for the first, for a year dishonestly when I was asked that question. So I said, oh yeah, we'll exit in like 3 to 5 years, and here are the likely buyers. So I thought that's what people wanted to hear.
Yeah.
And I think actually the answer is it depends. I think VCs want to hear that you're thinking about exit opportunities, but that exit opportunity doesn't need to be for your stake in the business too. So my own position is I don't want to sell. I really love what we're doing, and I think that for the foreseeable future, I think that the business can have the greatest impact with me involved. So instead, what I had to do with that being my emotional state of I don't want to let this go, and I can't foresee a situation in which that's going to change. In that state, I was thinking, well, okay, actually, VCs, yes, they've got their own interests. They need to see a return within a certain time frame. So, usually you've got sort of like 10 years plus 2, when you've got an extension where VCs they've raised a fund, they've got 10 years to deploy and exit those positions. But there are multiple ways of them exiting without your involvement going away. So you could say, well, actually, after X amount of time, we might be looking at a management buyout. We might be looking at like a secondary, like your ability to sell by secondary. So, we might do a much bigger raise down the line, like year 7. And at that point in time, perhaps we have a discussion about you wanting to sell your position. Like there are multiple other.
The second thing that you said, I didn't quite understand.
The secondaries then.
Yeah. What is that? The secondary what?
Yeah. So if you think about funding rounds, like you're issuing equity, then someone else is buying that equity, and they're taking a position in your company as you're growing. What a secondary is essentially the ability of an existing shareholder at the point where you've got new shareholders coming in and buying equity. Those new shareholders, you might only be selling 5% of your equity. That might be all you're willing to sell. But the new investor coming in might want 10% of the business in order for it to work for their maths. So what you might then have is, well, actually, I know that one of my existing investors, let's say in the first few years, it might be like your parents, if they put in like a few grand, that would go a long way right now, that they would see some level of return on. You might say, actually, hello, existing investor, you've mentioned already that you potentially want to sell your position. We've got someone that's willing to buy it at this price because they want to increase their shareholding in the company.
Okay.
And that's kind of what secondary would be.
Thank you.
Daniel, if I could add on a couple of points to that. So I think there are 2 or 3 schools of thought. I think when you're speaking to VCs now, half of them will go, you're deluded if you think you know what your exit will be, because your business will change. It's too early. The market will change. If you go in there with a staunch 3 to 5 to 7 year exit, half of them won't believe you. The other half will be very focused on, well, have you thought about your exit? Who are those contenders going to be? How are you going to get into them? So you need, I think, to be able to answer both critics with something reasonable, and be upfront that at this stage for seed funding, who knows? But I think you need to have a view on where that could go. I think you also need to look at where in the process of a fund your investors are. If they're right at the start of their fund, or if they're right at the end, that also changes the motivation behind how they use that capital. But Daniel, sort of from a practical perspective, a lot of, particularly with VCs and maybe let's say angels, or maybe some angels, you get ones that are very good at self-promotion. It's very easy to find them, maybe harder to get in contact with them because they're a bit more popular. There's a lot of funds out there that are less well known. How do you profile your investor? And what are the steps that a startup should reasonably get to get to their long list?
Yeah, good question. I think for us, and this is like our approach to it, is actually sectoral interest or field interest in a field is the biggest one. So are you approaching someone that is relevant to your business? And it almost doesn't, it matters as to whether or not they might open a checkbook them specifically for you as to what their fund parameters are. So like they might be a US based fund that really cares about clean air, and they might only be able to invest in US companies, but they might absolutely love what you're doing, and you might have US on your roadmap. And so opening that conversation up early actually is no bad thing, even if notionally like it's the wrong geography, the wrong stage. I actually would go from, if you're doing something niche and you can find other people in that niche, I would almost think about it a bit like YouTube. So lots of us watch different things on YouTube. We all have long tail interests that are not shared with others, and actually finding finding others that share that interest with you is perhaps the most important step from like a community building. And if we think about long list, actually that's an ideal long list. An ideal long list is people who really care about what it is that you're doing, you're building, and even almost selecting out those funds that don't neatly fit where you're at right now is almost like the perfect people to have, not on your short list but on your long list for future as well, because these are the people that you can keep appraised of your journey as you go on. So your long list would almost be who would be the ideal people. If I've got a newsletter that I'm going to send out for the next 5 years, thinking about my potential funding partners for the next 5 years, that would be what I would use to shape that long list, if that makes sense. Obviously, in terms of thinking about narrowing that down, then I think you need to look at like sort of sectoral, not just sectoral, geographic and stage. Geography and stage are then very, very important. Those are two things that we're working on at the moment, is where do funds deploy? Therefore, who should you think about having on your shortlist? And then also like what check sizes or what rounds do they tend to participate in? So one of the, I'll just might share screen for a moment and just show you something that we've built, which we're going to be releasing, I'm hoping, by year end.
I was just asking you whether or not you knew of any platforms that could help this entire process.
Yeah, so we can definitely help with part of this today, and hopefully all of it in future. So I'm just sharing screen. This is a screenshot because but basically this is a timeline of where a VC fund has raised. So everything above the red line is the VC fund having raised a fund. So this is a US fund called 83 North. And then below the line, you've got the types of rounds that they're participating in. So the size, the sort of the area of the graph is it doesn't quite match up. That's because 83 North get involved in funding rounds that might be very large funding rounds, but they only take a certain slice of it. But the reason why we're mapping this, we're mapping a load of this data, is we want to basically enable founders to see who might reasonably fund, and we'll just go here, who might reasonably fund their business. So the way we do that is we basically have built a tool that reads through news, and from reading through news, so for example here, third one down, you can see that it was a 4 million round, pre-series A, whatever that means, and it was led by Ion Pacific. And so we now have a data point that says Ion Pacific take part in rounds that are 4 million. It doesn't say that they'll do 4 million, but it says that if you're raising 4 million, Ion Pacific might be people that you want to potentially reach out to, basically. So that's something that's coming down the line, not yet sort of built that out. I'm very happy to dive in. Sorry.
Yeah, I was just about to segue into the platform actually.
Yeah, very happy to do that.
But I just a couple of other things that we always say is when you're profiling investors, you always think about who your ideal investor looks like. I think there's a profile of investor, type of person you want to work with, but also think about, you said check size, think about profile fit. Are you the right profile of founder in what they invest in? Do they like sustainability led founders, early stage founders, female, people of color founders? Do they invest in your business model? Do you have technology or business model alignment with them? Some are very clear on what they do and don't focus on. Do they match the same level of ambition? So if they talk about having 100x exits all over their website and you don't match that ambition, maybe don't waste each other's time. Always be fundraising as well. So any single contact you meet, put them onto a spreadsheet somewhere, and they might not be good for this round, but they might be for your Series A or post Series A or pre-Series A, or the terminology might be these days.
And newsletters are a fantastic way of keeping those engaged as well. And even if they're not a fit, even in that call, and their interests don't align. I think probably a number of people have heard the saying of like investors invest in lines, not dots.
Yeah.
And yeah, they're looking at a graph, and they're looking at your ability to prove momentum. So they want to see that you're tracking upwards. And so if you can get them on a newsletter and they can see your data points are improving, that's another way of doing it.
So Daniel, one of the challenges we've talked about, VCs love a warm intro. It's very difficult to engage interest if you go to info@genericvc.com. It's kind of hard to get a relevant opener to a VC. And I wondered whether or not you had a platform handy that helps investors and startups match and align and meet one another with loads of great information that can help that entire process get a lot easier.
Thank you, Paul. Yeah, well, funnily enough, in Blue Peter fashion, here's one we made earlier. So we worth me mentioning actually, it is this is not a platform for communication. So it's a search and research platform. So we can put in, I don't know, carbon sequestering.
Air quality.
Oh, air quality. Fine. All right. There we go. Let's type in air quality. So the way it works is we aggregate content from the web and from the websites of the VC funds that we discover via that sort of looking through funding news. So we aggregate that content, and we basically look through who is investing in companies that are semantically indicating that they're in that space. So if I go to portfolio companies, I can see who they've invested in. So yeah, Open Sensors, for example, are talking about this. So we've got a pull from their social media feed, and basically we can see, yeah, they're talking about this quite a lot, therefore indicates that they play in this space. And what we also then do is, beyond including investment entities, so i.e. those that are doing the investing, and then who they've invested in, we also include the individuals. This is it's still in development, but basically we're pulling through individuals that are talking about this topic, basically. And so, it's actually, in this instance, it really hasn't, it doesn't always work perfectly. This is actually not a very good example, but basically, yeah, you can see in this who is talking about the topic. It's actually, the search engine here has basically it's focused in on air being mentioned in this, even though I don't think that this deliriously popular art collective is necessarily to do with air quality. But yeah, so, basically that. So
yeah, decarbonisation actually, in hindsight, might have been a fairer one. Air quality is particularly difficult because very few people self-identify as being investors in air quality, hence the program. So what can you do with this information? So you go and you search for well done, Alex. You search for air quality, decarbonisation, or words around the types of investor that you're looking for. What happens then, and how is it useful for founders?
Yeah, so the way that it then works, so let's say that you decide the sort of angel co-fund or like dorm room fund here are relevant, and we'll just pretend for the moment that they definitely are. We'll do no further DD. We'll have done all our DD now. You can basically create shortlists. So I'm going to create a new shortlist now and call it decarbonisation, just so that we don't get it mixed up with a failing diet plan. And I'm going to save that now. So when I've saved it, that should now exist. No, sorry. I'm going to save that to my decarbonisation shortlist. I can also then go look through, say, like Tyson Technologies are really useful to this as well. I'm going to save them too. And then I can look through, okay, who are the other individuals who are talking about this topic? And I could say, actually, Robert Meyer is very interested in this, or like Daniel Israelson, and I'm going to save Daniel to that shortlist. And so I can build up essentially a research list of companies, investors, portfolio companies as well, that
Yeah.
are relevant to my research. Because never forget the portfolio company aspect of actually there are potential like both competitors and collaborators within that portfolio company space, and they are an absolute goldmine of information on who they spoke with, who they found good to speak with, and potentially a source of information or introductions to investors in that space if they kind of get what you're doing, and in particular if they're not competitive.
We always say that for investors in Seedrs or Crowdcube, or going on to Crunchbase and see who has invested in either adjacent companies, similar companies, or competitor companies. There's a view of investors that you could approach because they're familiar with the business model. Do you scrape sounds like the wrong word, but do you scrape from Crunchbase or aggregate, I suppose, from Crunchbase?
No, we don't. But that is the reason why we go with a semantic approach. So the ability to type in decarbonization and see who appears in the portfolio companies tab of that is kind of the way that we think about that. So we are aggregating the content from the portfolio pages of VC websites, and then we're incorporating the websites from the portfolio companies as well, so that you can then search through things like their social media feeds and also their websites, and that then helps you with identifying who's relevant from a decarbonization standpoint. Worth mentioning as well, just you can sort of download the CSV, and you can then basically look through that, and you then have things like shortlist name, and if there's an email address, then that will be present too, included, and other handles. So like LinkedIn profile. So I've got Daniel Israelson's LinkedIn profile here. So I don't use LinkedIn Sales Navigator myself, but I would imagine that if you've got something like that, then you can probably plug in these types of these types of data points into that, so that you can build up a list of people that you might want to contact.
Perfect. One quick observation, one quick question is for the cohort. We've got a guy in Indonesia, Aziz, who's amazing, who's about $5 or $6 an hour. If you give him a list like this and ask him to go and find the email addresses or fill in the gaps, he does it fairly quickly and accurately. He's brilliant. Secondly, is when you bring up a lot of the investors, people, can you filter by geography or not yet?
At the moment, I'm afraid not yet.
Yeah.
We basically we put all of our effort into expanding the size of the data set first, and in future there'll be more filters, like for example, who writes checks of the size or takes part in rounds of the size that I want, plus invests in the geographies that I need. In fact, actually, this is a diving down to the weeds a little bit. Finding out a business's geographic location is really difficult. It's one of the reasons why Google, if you tell Google your address, it's the only sort of physical interaction that you'll ever have with Google, most likely, unless you use one of their hardware products. But they send you a note in the post with a code on for you to verify that you're actually at that address, because even Google can't pick it up properly from your website. Yeah,
that's first. We had to do some Google validation the other day, and I literally had to make a video of the street name, the address, walking in to send to Google. Amazing. Thank you very much. Has anyone got any questions for Daniel?
I have a question if no one has. Oh, Ali, go ahead.
I was just going to congratulate Daniel's superb piece of kit. Well done.
Thank you. A long way to go, and feedback very welcome. It's very rough around the edges, but thank you.
It's really good to start. So I've used it a few times over the past year or so. It's a good rabbit hole to go down in a good way. Kristen.
Sure. So one thing that I've seen with VCs is they are used to the software returns. When they look at hardware, they almost just laugh at you, and they say, "Where's the rest of the money?" So we don't want to make up figures. So how do we get interest of VCs with our hardware business, I guess?
I wouldn't go to a software VC. Okay. So I realize that is it's a tautological argument. But there aren't that many hardware VCs around. You're right. and the returns profile is different. It requires more upfront investment. European funds outside of corporate venture are usually not that good at deep tech and hardware. US is a very promising space for that. It's the civilization that's funding our movement to the stars. There are more long-term big dreamers in US venture. It's one of the reasons why we've wanted to include go global, include everyone, and then let people sort of segment down by geography and self segment down, because actually, to our mind, if I go back to the YouTube analogy, I might really want to know how to make great unagi sushi rolls, and I'm going to want to watch a Japanese chef who's an expert in that prepare that, even if most of it's in Japanese and someone's put translation on top of it. For us, we care, like, the niche interest is what aligns people rather than sort of the borders, etc.
And with sorry, I lost my train of thought.
Sorry, Chris. It was the talk about sushi, I imagine.
Yeah, I got hungry.
What should you not use shipshape for? Like, what is it not a silver bullet for?
So it's not a directory. So if you go in and type Octopus Ventures, it will not call up Octopus Ventures for you. So you kind of have to search via field. So if you typed in something like, I don't know, quantum, you might find Simon King from Octopus Ventures talking about quantum. But yeah, so it's not a directory. It sounds really weird, but Google had to kind of reverse engineer a directory into it, so that if you typed in someone's name, it would know to go and bring up that person's profile and then use associated with that person, rather than everything around a certain area or field. It's just, I wouldn't use it for that. I wouldn't use it at the moment for finding specific geographically confined investors.
Yeah.
And I wouldn't use it for extremely focused in on my stage. And I think you might struggle elsewhere with that type of information too, quite frankly.
But look, it's really easy to sign up. All you need is LinkedIn. It's free. I think there is a paid feature coming down the line, or is the paid feature already there? I can't remember.
Paid feature is there, and actually just for full transparency with everyone, like the way that we monetize ultimately is from businesses providing us with data. So if you tell us, for example, if you've got a pitch deck or a financial model, or if you qualify for EIS or FCIS but you don't yet have advanced assurance, then basically there might be someone at, for example, like a tech law firm that specializes in advanced assurance applications, that might then reach out and say, you don't have this, you might want to get it for your fundraise. So we monetize fundamentally from the data. So we want to keep it free for founders, but ultimately, that's the sort of the quid pro quo, as it were. Because we'd rather be honest with you about like that. That's the way that we use data.
Amazing. But I urge everyone, go on, have a look, familiarize yourself with the platform. I think with air quality, it's challenging. There aren't so many people on there. That's just the sector that we work in, unfortunately. Hopefully it will change. But yeah, go and have a look. Daniel, I will share your details afterwards if people want to get in touch. But unless there are any more questions for Daniel. Nope. I might keep everyone else on here for 2 minutes just to talk about Thursday, if that's right. But Daniel, thank you very much. Great to see you as always. Thanks. And hopefully
you too.
Demo day.
Yeah, that'd be wonderful. I'll put my LinkedIn in the chat as well. Because it'd be great to connect, and very happy to answer sort of further questions. Lovely to meet you all, and all the best. And hope to be able to attend Demo Day.
Cool. Thanks very much, Daniel.
Bye.
Bye.